If you're new to futures trading, the term contract and the definition behind it can seem really complicated, but in reality it's actually very simple. So essentially, one contract has a certain value per tick or point. What is a tick or a point? So a tick is the minimum a product can move. So if the ES, for example, was to move from 5,100 to 5,125 cents, that is one tick up. If the ES was to move from 5,100 to 5,099.75, that is one tick down. On the ES specifically, there is 4 ticks to a point. So the point is basically the same, but it moves in more round numbers. So as there's 4 ticks to a point, it would be the ES moving from, say, 5,099.50 to 1, 2, 3, 4, 5,150. So it moves in $1 increments basically. So let's just see a quick example on TradingView. Let's get a long position out. Say we wanted to enter where price is now, market order, and we wanted our stop loss to be on this swing low here. That gives us a stop loss of 4.5 points or 18 ticks. So it's got both here on this stop loss tool. Then our take profit, say we wanted it to be on this swing high here, that would mean our take profit is 10.25 points or 41 ticks. So again, if I drag this stop loss to 1 point, which is just here, you'll see there's 4 ticks. If we drag it to 8 ticks, there's 2 points. So that's essentially what a tick and a point is. So what it basically is knowing how much a product has moved. It doesn't matter if you use ticks or points, they're the same thing. It's just a different way of saying a certain amount. I personally prefer to use points, but now you know what a tick and a point is, we'll go back to contracts. So a contract has a certain value per tick, and that value depends on what product you're trading. So at first we'll focus on the ES, and then we'll have a brief look at some of the other products. So when you're trading futures, you're buying and selling contracts depending on whether you think the price is going to go up or down. So if you're buying, you're expecting the price to go up, you're looking for longs. If you're selling, you're expecting the price to go down, you're looking for shorts. So for example, one tick on the ES is $12.50 move. So if you was to sell one contract on the ES and the price was to go up one tick, you would be in $12.50 of drawdown. If you buy or sell more than one contract, then it's essentially just multiplied by how many contracts you've traded. So if you buy 2 contracts on the ES, every tick is $25. If you buy 4 contracts on the ES, every tick is $50. So it can quickly stack up. But what it comes down to is when you're setting up your trade, you essentially just want to work out how many ticks or points your stop loss is, and then from that figure you can then work out how many contracts you want to trade depending on what your risk parameters are. The way I quickly figure out how many contracts I need is by referring to my risk chart. I set this up so I didn't have to get my calculator out every time I wanted to take a trade. So let's say I like the idea of a short, and then let's say my stop loss is here just above this swing high, so that makes my stop loss 3 points. So I would then jump over to my risk chart, then find 3 points in this left column, which is 3 points here, then scroll across and see how many contracts I need to use to get to my my risk target of 250. So one contract would be $150 risk, 2 contracts would be $300 risk. So I'm going to go for 2 contracts because that's closest to my 250 target. Obviously 3 contracts would be $450, which is way too much. I can then go back, set up my order, 2 contracts, knowing that if my stop loss is hit, I've only lost $300. But the best thing about the risk chart is being able to compare minis to micros. So you know that every product has a specific value per tick. Well, every product has a micro version. So you've got the mini ES, which is just a normal ES. But then you've got the micro ES, which is correlated exactly the same as the mini ES, but the value per tick is cheaper. So basically, if you're trading like a small account, you can trade with the micros to be not taking on so much risk. But if you're anything like me, you'll end up trading both. Sometimes you'll trade the mini, sometimes you'll trade the micros. And that's because sometimes I have quite a small stop loss, and then I'm happy to use the minis. But on other times, my stop loss is quite large, at which point I'm wanting to use the micros so I can keep to my $250 risk target. So let me give you some examples of what I mean. I'll show you on the NASDAQ, because that's normally what I trade. So on the left you've got the mini NQ, just a normal NQ, and then on the right hand side you've got the micro NQ. So you can see 1 point on the NQ is $20, and then 1 point on the micro NQ is $2. So my average stop loss is about 35 points. So if we go to 35 on the chart, we've got 35 here. So this means that most of my trades are taken on the micros, because one contract with 35 points is a $700 risk, which is far too much for me. So if you scroll across to the micros, see one contract is $70, but I'm normally going for around 4 contracts, because that's around $280. Obviously this varies, but it's normally between 4 and 5 micro contracts I'm using. But sometimes I have a smaller stop loss. So let's pretend that my stop loss is 15 points. On the micros, 5 contracts with a stop loss of 15 points would be a risk of $150, which is too small for me. If I'm doing a 2-to-1 trade, I'm only getting a return of $300, which is not my sort of target. So I'll then come over to the mini NQ, the normal NQ, with 1 contract, which would be a $300 risk. So sometimes, depending on what sort of size your stop loss is, you have to quickly switch between the micros and the minis. Referring to this chart just speeds up that process. You don't have to work out using a calculator and then flick over, because things move pretty quick. If you're trading with a prop firm like me, there's quite often a limit on how many contracts you can use in one trade or at one go. With Top Step, that limit is 5 contracts for the 50k combines. And then that would mean that my risk is capped to $150 on this trade. So then my next port of call would be to look at what my risk would be on the mini. So 1 contract on the mini would be $300, which is closer to my $250 target risk. So let's set up a trade on the Nasdaq so you can see how quickly this helps my decision and how many contracts to use. So let's just say, for example, I'm going along here. It's a bit of a silly place to be going along, but just for example's sake, stop loss is 30.5 points, so it's 30 points. Jump over to the risk chart, scroll down to 30 on the left. So we've got 30 here. Right, 1 contract on the mini would be $600 risk, too much. Scroll over to the micros. So the options would be 4 contracts for $240 risk, or 5 contracts for $300 risk. So for this trade, I'll go for 4 contracts. Can jump back over, enter the trade for 4 contracts. So within seconds, I've worked out how many contracts I need for this trade. I can then jump back onto the trading platform and crack straight on with the trade and focus my energy on the trade. So this risk chart has the majority of the popular futures products to trade. So you've got the ES, Nasdaq, the Dow Jones, the Russell, gold, and then finally crude oil. So whatever your product of choice, you've got all the contract details here. If you're someone that flicks between a lot, this might even be handier. For me, I only really trade the Nasdaq, but I still find it really helpful. So something like this isn't too hard to set up, it just takes a bit of time. If you do want this exact sheet, I've left a link for a digital download in the pinned comments. You will need a Google account, as it's a Google sheet, but this doesn't take too long to set up. The risk chart just makes my life easier. I can then just focus on trading rather than math. So I hope this video explains the ins and the outs of contracts and clears up any confusion for people that are new to futures. Any questions, just leave below and I'll try my best to answer them. If you found this video helpful, smash that like button. I'll see you next time.